If you're anything like us and you're out here living the American dream, at some point in your life, you'll want to make some significant purchases. Not if, but when you want to buy something big like a car or a house, and again, you're like us, you'll have to borrow some money in order to do that. And in order to borrow that money, you'll need good credit. So, welcome to A Beginner's Guide to Credit. Let's start at the start. Credit is created when one party receives resources from another party without immediate payment. It is essentially the promise to pay for something of value later, typically with interest charged by the lender. Here's a simple way to say it. Credit is using borrowed money to pay for something. But if you walk into a bank tomorrow and don't have good credit or don't have a history of credit at all, the bank will not loan you money to make that large American dream purchase. So in this video, we are going to walk you through the simple process of building credit and a good credit score, which brings us to the next idea in this beginner's guide. Your credit score is basically a scorecard that shows how responsible you are with money that's lent to you. In order for the bank to lend you money, they want to see if you'll be responsible enough to pay it all back. So the longer you can show the bank you're able to handle this type of debt by paying it off on time and not paying it off late, or even worse, not paying it back at all, banks and other institutions will be more likely to give you loans at the best and most favorable interest rates. Now you might ask, why do I care about favorable interest rate? That's a good question, and here's why I know you will care. Because even though you want to make your big American dream purchases, you'd still like to keep as much cash for your other needs in your pocket as possible, right? See, I knew you were just like me. So, what is a favorable or good interest rate? Well, basically the lowest one possible, so that as you're paying back your loan, there will be as little money as possible added onto it from your lender. This leads us back to our credit score and what it takes to build a good one. So, sit up and pay attention, because I'm about to give you 5 simple steps to building yourself a good credit score. Oh, but before I get to that, let me just emphasize one important point. Building your credit score should be a completely free process. It does not cost an extra penny to do this. So if somebody tells you different, you're doing it wrong. Okay, now here we go. Step 1, go to your bank. It doesn't really matter which one, just pick one and get a secured credit card. What is that, you ask? A secured credit card is the same as a traditional credit card, except that with a secured credit card, you pay a cash deposit upfront to guarantee your credit line. This enables the bank to cover themselves and make sure you will pay whatever you put on that credit card. Since this is a beginner's guide, we're assuming you're just starting out. So you have no history to show that you can be trusted with money lent to you. And a bank or other lender doesn't just hand out free money. So you deposit $500, for example, and you get a credit card with that $500 spending limit set. The card should have no annual fees attached to it, because remember, building your credit score is a completely free process. So go get a secured credit card and begin using it for simple purchases. Use it for only things you would normally use a debit card for. You know, gas, groceries, a meal out here or there. Do not purchase anything right now that you wouldn't normally be buying on a daily basis. In other words, don't think it's time to go out and buy a boat just because you have a credit card now. We are talking about building good credit, not splurging on the American dream just yet. Next step, and this is really important, pay off the card on time. Put only minimal purchases on the card and pay them off immediately, or at least on time. It is a myth that you must pay interest or carry a balance on your credit card to improve your credit score. Use it like a debit card. You're not carrying debt over. If you're building your credit, it is a free process. Keep it a free process by paying the card off on time every time. Step 3, keep repeating this process for 6 to 8 months. Put random expenses on your secured credit card and pay it off in full. Do this for 6 to 8 months. In this way, you will be accumulating some good credit history. It costs nothing but a little time and patience. patience and time. You can do it. You can even sing a little song to help pass the time. Building credit. No. You could add it to the song, just keep swimming. No, this is ridiculous and getting out of hand. Let's move on. After some time has passed and you've been faithful to pay your credit card in full, on time, every time, you can go on to get an unsecured or traditional credit card and another drum roll. That was horrible. Just manage it responsibly. According to moneygeek.com, the best credit card for a beginner is the Capital One Platinum credit card. It has no annual fees and no foreign transaction fees. Capital One automatically considers cardholders for higher credit lines in as little as 6 months. Setting up automatic payments is also possible. There's plenty of information online about credit cards, and as you dive into building up your credit and a good credit score, you'll want to access as much information as possible. As you continue down this road, you'll come to step 5, get other credit cards, and again, manage them responsibly. Now, that may sound counterintuitive to you if you're trying to be as financially responsible like me, but actually, the more lines of credit you have, the higher your score will be, because it shows that you can be responsible with multiple lines of credit. Therefore, banks will be more likely to loan you money for your American dream with lower interest rates moving into the future. And that's what we all want, right? To be able to fund our American dreams and still have cash in our wallets for our daily needs. Okay, now that we got those 5 simple steps out of the way and you are well on your way to developing good credit, you may have other questions like, how do I see my credit score? A service like creditkarma.com is a great place to check your credit score. Even easier though, is many banks and loan companies have started providing credit scores for their customers. It may be on your statement or you can access it online by logging into your account. You can also request a free copy of your credit report from each of the 3 major credit reporting agencies: Equifax, Experian, and TransUnion, once each year at annualcreditreport.com. These are what is known as soft inquiries and will not hurt your credit score. What you want to be careful of are hard inquiries into your credit score. A hard credit inquiry happens when you allow a lender to check your credit when you apply for a mortgage, credit card, or a loan. So let's talk about things that affect our credit scores. A hard credit inquiry could lower your score by a few points, or it may have very little effect on your score. Most of the time, a single hard inquiry is unlikely to play a huge role in whether you're approved for a new card or a loan. And the damage to your credit scores usually decreases or disappears even before the inquiry drops off your credit report for good. Hard credit checks generally stay on your credit report for about 2 years. You may think to yourself, that doesn't sound so bad, but you may want to think twice before applying for a handful of credit cards at the same time, or even within the span of a few months. Multiple hard inquiries in a short period of time could lead lenders and credit card issuers to consider you a high-risk customer. As it suggests, you may be short on cash or getting ready to rack up a lot of debt. So, you should really consider spreading out your credit card applications and carefully weighing in when you apply and what you apply for. A good rule of thumb, take your time and be super thoughtful. So if your credit score can go down, you may be asking, well, what makes my credit score go up? Besides the 5 simple steps we've already outlined earlier, staying on top of your accounts that don't generally appear on your credit report. So things like gym memberships, subscription services can be very important. The on-time payments might not help your credit, but the account being sent to collections could definitely cause your scores to dip. And using a tool like Experian Boost, which you can access at Experian.com, would actually enable you to add positive utility, cell phone, and streaming service payments for your Experian credit report. We know not everyone watching this video is just starting out on their credit journey. Some of you have already been down this road for a while and have created negative credit history. We're going to add a little help in here for you to do some repair and get you back on a good standing with your credit and happily pursuing your American dream again. First off though, a word of caution. It might seem tempting to let someone else fix your credit for you. We've all seen those commercials, right? But credit repair companies can't do anything that you can't do on your own for free. Don't fall for those scams. Just do the work yourself. It's not hard, it just takes time and patience. Patience and time. Remember the song? No? Okay, forget it. Much of the information we've shared already is useful in your situation as well. But here are some additional tips. If you're behind on your bills, bringing them to current could help. While a late payment can remain on your credit reports for up to 7 years, having all your accounts current can be good for your scores. Additionally, it stops further late payments from being added to your credit history as well as additional late fees. Even if you're behind on your bills, having a high balance on revolving credit accounts can lead to a high credit utilization rate and hurt your scores. Revolving accounts include credit cards and lines of credit, and maintaining a low balance on them relative to their credit limits can help you improve your scores. People with the highest credit scores tend to keep their credit utilization ratio in the low single digits. While you may need to open your accounts to build your credit file, you generally want to limit how often you submit credit applications. Hard inquiries can hurt you, remember? We keep talking about your credit score, but haven't actually shared a number. So what does a good credit score number actually look like? The vast majority of lenders use credit scores calculated by FICO, Fair Isaac Corporation, and Vantage Score scoring models. The most recent versions of their generic credit scores use a score range of 300 to 850, and score in the mid 600s or higher is often considered a good credit score. Generic means they're created for any type of lender. FICO also creates industry-specific scoring models for auto lenders and card issues that ranges from 250 to 900. All right, this is the wrap up. So we've shared a lot of useful information here today. Building credit, just keep swimming, okay, that'll be the end of that. There is plenty more to understand about credit utilization, types of accounts, etc., but this was a beginner's guide. We've covered a lot of the basics. So let us know in the comments below if you'd like a follow-up video on more intermediate info. We hope this will help you get started on the road to a good credit score today, and in a very short time, you will be able to buy a new home and create a happy, safe place to enjoy the most beautiful life possible. Go get out there and live that American dream. See you in the next one.